Hey everybody, uh, this is Paul. Thought I would make a quick little video. So I'm kind of aggravated. Um, I'm looking at what different people are saying and different pundits and whatnot about the different stocks and stuff like that. Um, so I thought I would give an explanation of how I understand what's going on with GameStop. Um, just like how I understand, just kind of what I'm looking at, what the bull case is, and just so you can see how this flows to other stocks. Namely anything that's shorted right now. And I'll show you just how greedy they got with GameStop, especially. I mean, effectively, Wall Street hedge fund all got together and decided to run this company into the dirt. Um, some people had figured out, I think, when it was trading, like over here at $4, this kind of stuff. When the stock price was trading at this right here, GameStop still had positive revenue, still positive revenue, and they still do. They in the store, like a GameStop store, they had valued the GameStop store. I think somebody had done the math at like $36,000 out of like 5,000 stores. Like they value the company at barely anything. So what's going on right here? And if you even take it back 5 years, what's going on? What happened was, and I'll show you in paint. This is a stupid way to do it, but so you have okay. So let's say you have one, two, three, four people. Okay, these four people all get in a room. Let's say this is the size of the stock, okay? And let's say all four of these people say, I want to buy the stock. So this guy buys it, this guy buys it, that guy buys it, that guy buys it, okay? So there's no shorts, okay? So like they're all buying the stock. All of a sudden, this guy says, no, I want to short it. Okay. So now you have this guy shorting it, and then these three still buying it. So let's say that's a 25% short interest, okay? This is just assuming, just out of, like, say there's only four shares. Now, this guy and this guy all of a sudden say, "Oh no, there's a fundamental reason why the company's bad." You could do that, and what happens is when this guy buys, these guys and the stock goes down, these guys profit now. Now there's a 75% short interest. Okay, so here's where the problem with GameStop is, and this is why it's even when it got past the second guy, it was excessive because more than 50% short interest in a company is pretty ridiculous. What's going on is basically all four of these guys started shorting it. So there was barely any buyers. The only buyers were probably the employees who had employee stock plans, maybe a few suckers, and like maybe a few pensions, or maybe like some institutional investors who hadn't dumped out yet. The problem is, all four of these guys are now shorting the stock. Any price moves, they're making money, right? So they're riding GameStop into the ground, literally into the ground, into bankruptcy. No creditors want to touch them. They know this. So they're riding GameStop into the ground for years. Well, what happens is somewhere around here, it wasn't like this guy on Reddit, okay? It was guys like Michael Burry and Stephen Cohen. You know, very smart people, extremely smart people realized, hold on, there's still value here. Wall Street's telling us, oh, everybody's just going to go online. Everybody's going to do everything online. Nobody's going to have a physical copy of a game ever again. They're just going to order it from Amazon. It makes no sense. And the reason it makes no sense is because in reality, what's going on is if you try to, instead of like owning a physical copy and just stream a game online, go ask Google Stadia how that worked out for them. Our infrastructure sucks. The latency was so bad, you got destroyed playing a game. That's Google. That's a $3 trillion like Google, or Alphabet or whatever they want to call themselves. They tried this with Stadia. It's a disaster. Our infrastructure sucks. We need like 6 or 7G before we were able to do that. So then everybody's like, well, everybody's just never going to order a physical copy of a game. Well, or you can download the game. Okay, so that's the other theory they have. You can download the game. You can download the game. You don't need physical copies anymore. You know, and that's just ignoring the simple fact of all the other parts of the business that GameStop has. The problem is, And this has already been reviewed by hundreds of people, and also the guy Roaring Kitty who made this famous. And this is another thing that a lot of people don't understand. My internet connection is capped. Every month, because they got rid of net neutrality, my internet connection is 1 terabyte. Before the PS5 came along, just day one to download a game is 100 gigabytes. The day one patch of a game is normally 80 gigabytes or 90 gigabytes. And that's before the PS5 came along. That's going to go up to 200, 300. And also stream, like, because I cut the cord along with a lot of other people who do this, and a lot of us work from home too. So we work from home, we stream, and now you also want us to download games. Okay. And then you're just going to go over your monthly allotment from the cable company. That doesn't even exclude the simple fact that what are you going to, where are you going to do? Just order all your consoles? You're just going to order all your PS5s from Amazon now? You're just going to have one single supplier? Maybe Best Buy? Best Buy is going to be the only place you can go for a physical copy, and then, you have to order from Amazon. That's going to be your only two choices. That's capitalism to these guys. They want to just shut down all the competition. It's the same thing that happened with, like, say, Toys R Us. They run these companies into debt. They bet against them. And then they ride them into the dirt, into bankruptcy. And then basically they go and pillage the stores for the rest of their money. They basically sell the stores for pennies on the dollar. You can see this on literally every corner right now. JCPenney, Toys R Us. These are stores that were profitable, but not profitable enough for these guys. And what they did is they ganged up on them. Now, here's where this gets really dirty. So what happens is you have these hedge funds. They got together and they said, okay, we're all going to short this stock into the ground, and we're going to ride this thing into bankruptcy. The problem is they ran out of stock to short. So what do? Well, all of a sudden, so let's say this guy right here gets together and says, hey, I don't have any stocks to short. Can I short not the original, what you got up here? Can I short this down here? Well, now all of a sudden, you're at 125% of short interest. And then all of a sudden, this guy over here decides to talk to this guy over here and says, hey, we can short this even more. Let's do 140%. Each time that this happened, any minor move in the stock price, and this is what people figured out, like Michael Burry and Stephen Cohen, what they figured out, any minor move in the stock price, and you're going to start to see just flat out doubling, because these guys have such massive short positions that they have to cover. Now, when it was at like $3 and they had to cover $4, whatever, they don't care, right? That's just $1. But the problem is when you actually get good news, fundamental news. Oh, hey, look, we might have vaccines. People might be able to go outside again and might feel safe going outside again. Uh-oh, now we're at 13. This is when the Wall Street Bets crowd starts to look at, because don't let anybody get you confused. When the guy posted this and he said, hey, I am taking out these positions all the way over here in April on GameStop, thinking that there's going to be like some real fundamental, he started posting his videos, Roaring Kitty, he got laughed at because they see people lose money all the time on Wall Street Bets. And they're like, well, we look forward to your, to your losses. And he posted his losses because he was taking losses all in here. But he held and he held because he believed in his scenario. And this is why this guy is a legend. What's going on is basically when you get enough good news, people start to realize the game. All you have to do, and this is what the guys keep telling you, if you hold the stock, you don't give them anything else that they can short. So they just have to basically rebuy their shares. So now they go in here and it's at 18. Then it's at 39. See how it's doubling? And the reason it is doubling is because, and it's doubling almost every time a week passes. And there's a reason, I'm going to show you that. Every time a week passes, it all of a sudden jumps. And then all of a sudden it jumps again. You see how it gets exponential? And I'll show you why this doesn't continue and it actually does crash at one point. Because the reason it crashes at one point is because at some point these guys need to take their losses. Because the game has been figured out. They've been uncovered. This is why short position guys never come out. They normally never come out and say we have a short on the stock. You can assume they do because they don't want somebody else doing this. Like if this had been like Carl Icahn did this to Bill Ackman before. Bill Ackman thought there was going to be a short on Herbalife, so he thought the company was crap. That was his short thesis. Carl Icahn came in here with a boatload of money. He did it by himself and drove him out of the. It made it so painful for him that it drove him out of the stock. Like what's going on right now is that a lot of news organizations are telling you, "Oh no, oh, oh, Melvin Capital got out of this stock," and this is why I think this is incredibly stupid because they assume we're like 5-year-olds and they have to tell us what to do. Here, you want to see what's going on right now? If I go to all, anybody can do this. You might not be able to do it on Robinhood because they suck. I don't know why you have Robinhood. Okay, here's what's going on. This is what's going on. They keep telling you they closed their short positions. Okay, the strike price right here, 50 cents. Look how much open contracts they still have. You see this right here? So every single week that this GME is over 50 cents, whoever this poor bastard is that owns these contracts needs to roll their, either close this position, take their loss, go home, and cry, or roll their position over. So what that means is that instead of being given the stock at 50 cents because that's what it closed under, they now have to buy it at this price. And we're not talking small volumes here, people. We're talking really big volumes. So when somebody like Stephanie Rule or somebody over at CNBC is asking about the psychology of what's going on, here's what's going on. These people, see these ones over here? These guys? It just keeps going. Look at this is the strike price, okay? See the strike price? Look at this. The stock is sitting at $325 right now. Okay, you see this right here? This is where it ends. All of this is open contracts that are short on this stock still. So if you want to know why the stock keeps going up, it's really not because of these guys. These guys are literally just holding their positions. It's because of these people. Every week they have to roll their positions over because they refuse to admit, and these are significant losses, I'm not going to lie. I can see why they're doing it, because they think they can ride this out longer than these guys can ride it out. Why would, in God's name, do you think these people would sell? These people over here. Like, look at the open interest on the calls compared to the open interest on the shorts. There's literally this many that the volume, this is the volume. Like, they literally think that this stock is going down to 50 cents by the end of February, like by the end of this week right here. Look at this. By that right there. It's easy money. And I can already tell you, when they're telling you that people like Melvin and them have closed their positions, they're lying. There's no way. If they closed them, they gave them to somebody else. I don't think they closed them. I think they handed the contracts to somebody else. Like somebody else bought the contracts from them. Because that's the only way you're getting out of this position. It's the same thing that happened in 2008. It's literally, you basically had to convince somebody to buy your crappy contracts. Go watch the movie Margin Call if you want to see how that worked. When those guys are on the phone at the end of the movie saying, no, these CDO and these mortgage bonds are great. You guys should buy these. They're basically trying to get rid of their crap. Because this right here is debt to these whoever, and it doesn't tell you. When you go into the details, it doesn't tell you. But we're talking some serious stuff. And the options multiplier is 100. This is just E-Trade that's tracking this. And the reason why people are also bullish on AMC, just so you know, and there's multiple other stocks that this is happening in. I believe there's a fundamental case that AMC can come back. I don't know why people in the market are so short-sighted. The market is supposed to be 6 months looking. The Biden administration says they could probably get everybody in the United States vaccinated by July. 7 months from now, 6 months from now. Okay, the market is supposed to be forward-looking. This used to be a $34 stock. There is a bull case scenario that people are probably tired of living in their homes, and that movie theaters are going to get, because the movie theater or the producers and the companies are not making as much money on HBO Max as they were in the movie theaters. You know, you're releasing a movie on HBO Max making $20 million. When you release it in a movie theater, you make $100 million. Okay, movie theaters are not going anywhere anytime soon. This is the problem with AMC. This is the exact same thing. They take a good company that has a bunch of employees that are contributing, that are doing their thing, that have pension funds and different types of things invested in it, and they try to short it into the damn ground. Look at this. This is the $10 strike price. Look at this. Just go up there. And these contracts rolled over because I had a screenshot from the contracts that just expired. It looked just like this. All they're doing is rolling their contracts over. But once you get past, look at this. And this is a little bit different. Once you get past this right here, this kind of stuff, it's literally people that are just, and when you go to the very next week, it's just these open interests. This continues, these stock price moves, this right here continues until these guys close their stuff, because that's the buyers. Do you seriously think a bunch of retail traders on Wall Street bets, where probably half of them are using Robinhood right now and won't even let them buy shares, which is ridiculous? Because Robinhood was telling them they can only buy one share. Yesterday I was able to buy over 100 and something shares of AMC on E-Trade, by the way, with no issue. But Robinhood's telling them they can only buy 1 or 5 shares. It's the most ridiculous thing I've ever seen. They're acting like the company's running out of shares. It's insane. I don't like, I don't know what is going on at Robinhood right now. They seriously just, I don't know. They need to fire their entire accounting department and get a bunch of new people. But it's really, really aggravating what's going on right now in the market. But the problem is that they're telling you, oh, these people are going to get bit in the ass. Yeah, maybe. But if you time your trade correctly, see what's going to happen is when these guys finally capitulate, that's what it's called. These short guys capitulate, that's when you see a quick spike, a very, very big spike. So that's why everybody thought, the reason why a lot of people thought this was the squeeze right here was they thought that was the squeeze right there, the short squeeze, the shorts getting squeezed out of their positions finally and having to just close their position. Well, when they close their positions, they have to buy the stock. Well, you have to buy the stock and then you have to sell the stock. You have to actually own the stock. Oh, God forbid, right? Which really, I hate that. Like, they can just basically short the stock without actually owning it. But what they do, and I think that's what Elon Musk posted. He's like, they can literally just try to short the stock into the ground and then over short it by over 100%, and then that's fine. But, the retail guys who basically found this out and all got together and basically became like a little mini Carl Icahn are the problem. When they do finally capitulate, you will see a massive spike. But the problem is they're not capitulating. You can see it on the GME options chart. I don't understand why like these CNBC contributors and these different people on the internet are like, oh, well, listen up, kids. At some point it's going to crash. Yeah, they're not stupid. You think these guys are stupid? These guys right here? Like, you think I'm stupid? Like, I'm in my 30s. Like, I'm almost 40. Like, dude, I realize what's going on right now. What's going on right now is that a bunch of hedge funds got really, really greedy, kept telling you that the future was Netflix. And this is what if you've been watching the news networks or the business networks for the last 5 months, all they have been telling you, and especially Lisa Abramovitz and all them, have been telling you, the future is Netflix. Have you watched Netflix lately? They suck. Like, their subscriptions are going down because their content sucks. They can't even make content right now because of the virus. And she's telling me, oh, well, what they're going to do is everything's going to be direct streaming. Are you serious? Do you think the movie studios are happy right now that they're paying hundreds of millions of dollars for a movie, but they're barely getting anything back? Yeah. Like, I think people are kind of tired of getting cooped up in their houses right now. And I wish, like, the news networks would understand it. Just because you're happy in your house in New York, doesn't mean like everything's cool over here. People want to go back to bars. People want to get back to their normal lives. People want to get back to doing what their normal thing is. That includes going to the movies. Just get over it. It's so annoying. So what I see happening next week, like, is AMC like a long-term hold for me? It could be. Could easily be. Is it quick money right now? Without a doubt. Is it a long-term hold? Do I think maybe it might go back up to 34? Yeah, maybe in like 4 years. 3 years. It might recover completely to even higher. Does this go up to 300? I don't know, to be honest with you. The short interest on it is about half of what it was in GameStop. But this is a lot. Like, every single person you see here as long as the stock stays above, let's say for example, where's the strike price 13? Everybody up here has to cover. Every single person you see right here has to cover these positions at 100 shares apiece. You could just do the math on that and just understand that every single week that goes by, all you literally have to do is just hold the stock, and they're just going to keep rolling it over until these guys give up their positions. That's it. Because that's really the new money in these stocks. And that's what I really, really hate about these business networks is they know this. Like, these guys literally bought, and all they're doing is holding. That's all they're doing. Like, that's all they're doing. They're literally bought, and then they're holding. What's going on is the new money, the real new money, is the guys who are think the stock's going down to 50 cents who are rolling over these positions every single week thinking the stock's still going into the ground. This doesn't end until you see the options. When you look in the options market and you see the amount of people with calls is basically sky high and the amount of people with puts is nothing. That's when the new money stops flowing in. Because I tell you right now, retail traders are not driving this. You kidding me? What kind of retail traders have, like, if you look at the volume, 1.7 million after hours. I mean, come on, guys. Like, they're, this is institutional who have figured out what's really, like, institutional investors have looked at this, realized, oh, there actually is, a scenario here. Hell, for all we know, this could be Carl Icahn coming in here. Some of these really, really massive investors with like billions of dollars coming in here going, oh, there is blood in the water. We can go after some people that screwed us on other investments. Like, the Chamath guy, he dropped $500,000 and you saw a spike right then and there. Like, these guys are buying like serious amounts. This isn't retail. You kidding me? Maybe this might be. A little bit of this is retail, but 600 million is the volume in shares traded. I mean, you gotta come on, like you gotta get reality and realize what's going on. So I think hopefully that explains what's a little bit what's going on. I mean, AMC is definitely a bagger for me. I've made serious money on it. I mean, this is just on Friday what I made after everything finally settled. I mean, it was pretty obvious. There's some technical levels on this stock. Like, the technical levels were pretty pronounced. I mean, what happened is I can easily tell you what happened to AMC. The technical level where the stock should probably be sitting, my bull case on the stock was $7. So I bought in, I sold all of it, bought back in. Then what I realized is that all of a sudden it started to hang around. It wouldn't go below 11.75, like, or in that area, and it sat around 12. And what had happened is one of their biggest debtors realized what's going on. They realized, instead of holding all this debt, we can just convert this into stock because that's in the contract. They never would have done that until these retail guys got in here and realized what was going on. So basically, we just saved AMC because they were able to borrow $900 million to pay off most of their debt, and then one of their biggest debt holders, $600 million worth of debt, converted it to stock. So they bought all this stock. So now AMC has revenue with less debt payments. Like, that's an actual bull case scenario. And if you have a virus that's gone away and you might have a little recovery going on here, it's easy to see how the stock might actually go back up. Does it go back to 34? Does it go back to 134, 334? I have no idea. Am I selling? No. Look at the price I got in at. The only way I would sell this is if I see it get irrational. Like, if I'm a kind of like a normal, just like dividend guy. So if you notice, majority of everything I hold is dividends. If I see this take off to 100, yeah, I'm probably gonna dump this. I'll hold these right here, the $8 ones. Probably this 12.57. Would I get rid of this? Maybe. I can completely, like, if this goes up to 100, it's a $90 extra I've made on each of what, 40, 80 something shares right there. 80 times 90, that's $7,000. Hey, that's good enough profit for me. Some people want to ride this up to like there or something. All I know is that the people that are short on a lot of these stocks have severely undervalued them and just need to give up. Like that's the only way that this ends. They just need to give up and be like, okay, we're gonna take our losses, we're gonna take our wounds, and we're just gonna go home. Because what they're doing, and you can literally see it in the stock market, what they're doing is these people that are shorting these stocks, like these big hedge funds, they also have long positions. Well, those long positions are in things like Apple. Look how much Apple was down, 3.74%. Do you realize how much money that is that got wiped off of Apple's stock price? What they're doing is they're drawing down their long positions in these different ETFs that they own or just individual stock names that they own. You can see it literally happening. Like bonds were higher, like interest rates were higher on Friday, but things like JP Morgan were down. Where is it? And this is what happens when you have a diversified portfolio. You can see what's going on. Like this should have been up. In any other scenario, this should have been up. When you see bonds up like that, that's actually really good for banks and stuff like that. So the banks, these types of things, should have been up, but they weren't. Which tells me that what's going on is the idiots refuse to give up their positions. They realize they're going to have a cash crunch, so they're having to roll it over. And then the entire situation with Robinhood is they just need to fire their entire accounting department. Because when you start seeing Robinhood say you can't buy Starbucks, what the hell? Like, it has a ridiculous PE, I'll give you that. But I mean, it like that tells you that Robinhood is having very, very bad liquidity problems, and that CF or the C or CEO, whoever it is, needs to be fired. The Vlad guy, he needs to be fired or put in jail because he is like really misleading people, like of what's really going on. Because saying that you can't buy, like they were limited AMC to 10 shares. Look how many I was buying. At the exact same time that Robinhood was telling you, look how much I bought just on Friday. 36, 43, 20. And this is as I saw it hit technical levels that were holding. Like, I don't understand why anybody would go Robinhood. Not anymore. I just can't. You can't convince me there's a reason to do it. They just don't have the amount of research, amount of flexibility. Brokerages still offer free trades. Just find yourself a good broker and get away from Robinhood because they're garbage. They're really bad. Like something's really there's so many red flags going on with Robinhood right now that they need to raise money. Like when they start restricting sales of like Starbucks and stuff like that, yeah, there's something going on. Ford and GM is put on their restricted list. That makes no sense because there's not like where's the speculation at in Starbucks? Like I don't know. There's some weird stuff going on. Um, I think what they're doing is they're robbing from Peter to pay Paul. So what they're doing is they're taking it's weird. They're doing some funny. I hope the SEC just takes them to town because I have a feeling they're doing some pretty wild stuff over there that just needs to be investigated. But so that's just kind of my video ranting about what's going on right now. And just I'm so aggravated right now because like they treating us like we're kids, and I'm a grown ass man. I don't need Stephanie Rule or like some of these other people like lecturing us on what's going on. People are not stupid. They're well aware that once the shorts get squeezed out, you're gonna have another VW, and this is what it looks like. If you want to see what it, I don't even know where it's at. No, I don't even know where VW is. VW had this thing happen a few years ago where it was kind of the same thing, but this was institutional investors and nobody gave a damn then. It was fun. All the businesses that were picked aside and cheered for one side or the other. And what really happened is the shorts finally got squeezed out at this ridiculously high price. They were forced to cover their shorts and buy all the stock instead of just rolling it over. And then they sold all their stock. And then it just went, psh, and then VW went down to the ground. It's the same thing. Except for this time, you have institutional investors on one side with billions upon billions of dollars, and you have retail and it's also institutional investors who are now realizing, and the institutional investors are the ones that are going to really drive it, that are really going to drive the shorts to just get completely squeezed. Because what happens is, as long as retail holds, that's all you need. Literally, all you need them to do is hold at one price. Just hold a stock, which is what apparently boomers have been telling us to do anyways. You should hold stock. Well, we're holding stock and they don't like it. We're not holding the right stocks. If we were all holding Apple and Netflix and, doing what they told us to do, everything would be fine. But no, we're not holding the stocks they want us to hold, so they're kind of mad at us. I don't know. Um, so we'll see how it ends. I don't think it ends this week, to be honest with you. I really don't think it ends this week. I don't think it ends anytime soon. I think what's going to happen is this is going to go on for a while because it's not going to end until the shorts get squeezed out of their positions. That's the only way it ends because retail is not selling. I mean, yeah, you're not going to spook retail out. I think they've had enough. You have retail people who are understanding what short ladder strategies are now. Like like you literally like just these technical terms, gamma squeezes, things that you've never heard of before this week. Like you have retail understanding what all that is. So all the tricks that they normally use to manipulate a stock price down to try and scare retail out of a stock, everybody's just sitting there looking at them like they're stupid. And they tried it with AMC on Friday when it went down to like 11.75 to try and spook a lot of people out of the stock, and a lot of people just sat there and held. So all they did was hold because as soon as they were done with their short ladder strategy, and you can look it up, it went right back up. So we'll see how it goes. So I don't know. Just ask me any questions you have. Like I said, I'm not an expert on options at all. As you notice, I don't do options, but I kind of get the general idea. And E-Trade does give you the ability to see what the call interest and what the put interest are on stocks. It's ridiculous some of the like things I'm seeing said right now. So I don't know. We'll see where it goes. So hopefully everything works out. Have a nice day.